Imagine a treasure chest, not buried under sand, but safeguarded for the future of Trinidad and Tobago, a fund that protects our economy during tough times and secures wealth for generations to come. But how does it work? And why does it matter to you? Let's unlock the story behind the Heritage and Stabilisation Fund. Whether you're gearing up to vote for the first time or have been casting ballots for years, understanding the Heritage and Stabilisation Fund, or HSF, is crucial. It's not just about big numbers, it's about securing our future, managing our energy wealth, and ensuring we're prepared for whatever comes next. Let's explore how it works, how it's invested, and what the future holds. The Heritage and Stabilisation Fund is like a savings account for our country. It was created in 2007 to manage extra money earned from oil and gas, our nation's biggest exports. It's funded when oil and gas revenues exceed budget projections as determined by the Ministry of Finance. Why does the HSF matter? Think of it as an umbrella during the rainy days. In 2020, when oil prices were low and COVID-19 hit hard, $900 million from the fund helped keep our economy afloat. Without it, things could have been much worse. The HSF isn't just about today, it's about tomorrow. Over time, it has grown from $4.7 billion in 2022 to over $6 billion by 2024. That growth ensures future generations have a financial safety net. The fund doesn't just sit idle. It's invested globally in stocks and bonds to grow even more. For example, in 2023, these investments earned a return of over 10%, helping the fund recover from earlier challenges. Now, who contributes to this vital fund? Well, the HSF doesn't receive direct contributions from specific companies, but is indirectly funded through government revenues generated by major energy firms operating in Trinidad and Tobago. Key players include the National Gas Company and GC, a state-owned entity involved in gas processing and LNG production, with a restructured 10% stake across all Atlantic LNG trains as of October 2024. We also have Shell, a major partner in projects like Dragonfield, supplying 700 million cubic feet of gas daily, and BP, boosting output through initiatives like the Ginger project approved in 2024. Woodside Energy and Challenger Energy also contributed until their divestments in early 2025. These companies pay taxes, royalties, and production sharing agreements that bolster government surpluses, and when fiscal conditions allow, those surpluses are deposited into the HSF. But how are these funds allocated? The HSF doesn't just sit idle. It grows by investing globally across diverse asset classes to balance risk and reward. Its investments are allocated into equities, which are shares of companies that can grow over time, but come with risks like U.S. core domestic equity, investments in U.S.-based companies tracked against benchmarks like the Russell 3000, as well as non-U.S. core international equity, which are stocks in developed markets outside the U.S. Fixed income refers to safer investments that provide steady returns. This includes U.S. short-duration fixed income, short-term U.S. government or high-quality corporate bonds prioritizing liquidity and capital preservation, and U.S. core domestic fixed income with longer-term U.S. bonds, such as treasuries or investment-grade securities, balancing yield and safety. The HSF's investment strategy revolves around strategic asset allocation, SAA. Think of SAA as a recipe for investing. It determines the ideal mix of different assets to achieve the fund's goals while managing risk. First, the fund sets target percentages for each asset class based on long-term goals. For example, as of 2023, it sets targets in U.S. core domestic equity, non-U.S. core international equity, U.S. short duration fixed income, and U.S. core domestic fixed income. The fund aims to maintain these percentages. If one asset class performs exceptionally well, the fund may rebalance by selling some of those assets and buying others to return the portfolio to its strategic allocation. SAA ensures diversification, reducing risk and maximizing long-term returns. It prevents the fund from being too heavily invested in any single asset class, protecting it from market volatility. But even with its successes, the HSF faces significant challenges. Our economy relies heavily on oil and gas revenues, making us vulnerable to price volatility. For example, oil dropped from $85 to $70 per barrel and then dropped even further to $60 per barrel recently, as projected in the Ministry of Finance's 2025 budget statement. Decreases like this directly impact government revenues and the potential for HSF contributions. As a result, no contributions were made to the fund in fiscal year 2023. International events can significantly influence the HSF. The U.S.'s imposition of tariffs on Venezuelan oil buyers could disrupt regional energy markets and affect Trinidad and Tobago's energy exports. Additionally, slower projected global growth of 3.1% in 2025, according to the IMF, could impact investment returns and overall economic activity. The COVID-19 crisis in 2020, the Russia-Ukraine conflict in 2022, the Atlantic LNG restructuring in 2024, and the oil price crash between 2015 and 2016 have all impacted the fund. Looking ahead, the future of the HSF depends on several factors. One major development is the revocation of the OFAC license for the Dragon gas field in early 2025. This move by the U.S. government has put a halt to planned gas imports from Venezuela, affecting the 700 million cubic feet per day that Trinidad and Tobago was banking on. Without this supply, the country must seek alternative sources to meet domestic demand and export obligations, which could impact future energy revenues and, by extension, HSF contributions. While this is a setback, there are still opportunities. The Atlantic LNG restructuring, finalized in Q1 2024, increased NGC's revenue share to 10% across all trains, potentially boosting LNG earnings. Diplomatic efforts, like Prime Minister Stuart Young's March 2025 meeting with the U.S. Secretary of State, remain critical to navigating regional energy diplomacy. But it's clear, energy security and diversification are now more urgent than ever. One exciting area for diversification is within the energy sector itself. For example, back in 2018, Petrotrin was restructured due to unsustainable debt of 12 billion Trinidad and Tobago dollars and inefficiencies that led to the closure of the Point Beer refinery. While this ended domestic refining, it boosted upstream crude oil production under Heritage Petroleum, allowing exports to the U.S. to grow to 75% of total crude exports by 2023. Reopening or modernizing this refinery with private investment could restore value-added processing, producing refined products like diesel or jet fuel for regional markets instead of relying solely on raw exports. Alternatively, repurposing the refinery site for renewable energy projects such as solar or hydrogen production could align with global decarbonization trends while utilizing its industrial footprint. The HSF's growth offers financial support for such initiatives, while partnerships with firms like Shell and BP could provide technical expertise. Enhancing downstream petrochemicals could further diversify our energy portfolio while maintaining a balance between fossil fuels and sustainable growth. Past debates, like the UNC's critique of NGC's $440 million ALNG investment, highlight political scrutiny's role in shaping HSF oversight. Ultimately, this isn't just about economics, it's about you. The HSF funds schools, hospitals, infrastructure projects, everything that keeps our nation running during tough times. As voters, you have a say in how this fund is managed. Are leaders protecting it for future generations? Are they balancing withdrawals with growth? The Heritage and Stabilisation Fund is more than just numbers. It's a lifeline for Trinidad and Tobago during hard times and a promise of prosperity for years to come. As citizens, we all share responsibility for protecting this treasure chest. So stay informed, ask questions, and make your voice heard at the polls. Share this video with friends and family, because understanding our nation's wealth is key to shaping its future.